Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 21st of January. All right, as we start the week, there's not a huge amount of change in the numbers. The Friday's major release, the Canadian CPI numbers, slightly better than expected, month on month and year on year, but really no major changes there to dollar CAD, even with oil continuing to rally, getting up to currently at $53.5 a barrel. Now, on the majors, okay, Aussie dollar just cruising sideways. I mean, Kiwi, it has sort of slowly peaked on an hourly basis, but still overall sideways despite it looking like it's going down. Dollar yen is really clearly making an upward move. It's not aggressive at all. That's one of those slow, it's like watching paint dry, but it is starting to move higher. And we are starting to see a bit of a clear direction here on euro to the downside. It did pop up to just above up to 114.10 on Friday, but you know what you're looking for here is it is moving lower. So I like the look of that. UK, Brexit, sterling. Okay, I expect we're going to see more price action like this on the daily charts, the medium-term charts, and the long-term charts like the weeklies and monthlies. It is moving higher, but short-term you've got to expect gyrations up and down as the Brexit deal rolls out. Now, just having a look here at the dollar index, actually, whilst I'm on that page, let me just come back to that. There's a couple of things just to have a look at. There's some very clear movements here. Now, if I come over to my tech page where I do a bit of analysis on the different time frames, dollar Swiss clearly moving to the top side on the hourlies. It's broken higher on the daily charts there as well. Now, it's just sitting within current ranges on the bigger time frame, the weekly time frame, and obviously the monthly as well. But you know what? This thing is starting to cruise to the top side. Give you a bit of an idea what's going on with the dollar. And with that as well, we're looking at, if you look at the dollar index itself, it is starting to make a little bit of inroads. Let me just get my pen going. On the top side here, it's broken, just fractionally broken through 96, sort of 25.30. And it was just sort of cruising to the downside, has slightly broken higher there on the daily charts as well. On the bigger time frames, it's sort of still trading sideways, but this is, it's a good sign that the US dollar is starting to make some move. Now, unfortunately though, so this is where the sort of good news sort of drops. The move in the US dollar index is more geopolitical than anything else. Don't forget, we've got the US government shut down at the moment, really making a big impact on the US numbers. Okay, there's a major delay in a lot of the US numbers, and that is going to cause a little bit of problems as we go forward because, the central bank looks for the numbers to determine policy. Now, if they haven't got any numbers to work with, well, how are they to know what's going on in the economy? So that's where it really comes into play. So the US dollar, okay, looking at the major currency pair outlook on the MyFX Trading Hub, at the moment, it's up, but we aren't seeing the full picture on the dollar. And a lot of this up movement has been put down to, the real positive rumours going around about the US and China trade deal. Dollar yen slowly moving to the top side, and dollar Swiss. Euros a little bit sort of mildly bearish with that up move in the dollar. And we had some weak numbers out of Europe last week. Sterling has been moving higher, but that sort of light slight up move in the US dollar does sort of neutralise sterling somewhat, and you've just got the Aussie and Kiwi there sitting sideways. Now, and there's not much else you can do about this. What we've got to do is just wait, okay? I know I've been saying it for a few weeks, but when you look at the overall picture here, and when I'm talking about, you're looking at this, say, the news, what we're usually looking for is news about the central banks, what they're going to do with policy, what's inflation doing across the board, et cetera, across all currency pairs. We're not seeing that. All we're seeing is, some positive optimism about a US-China trade deal. Trump's got his hands full with the sort of all these immigration things he's trying to do, but the government shutdown is one of the bigger ones. And then the rest of these articles, it's all a bit of hearsay with regard to Brexit hopes. If you're reading an article in the financial markets about hope, it's fictitious, right? So don't get yourself too caught up on that situation at the moment. So news, there's not a lot for us to work with just at the moment, okay? The UK situation and Brexit has things on hold. somewhat with sterling and sterling crosses. The US dollar, even though it's poking its head higher on the dollar index, the US government shutdown is causing a huge amount of, well, not necessarily confusion, but it's not giving us the full picture with what's going on in the majors. And that's why when you come back and you do look at the major currency pairs, we are getting that very mixed picture here. Aussie dollar just sideways. There's nothing really happening with the Aussie data. The US numbers, pretty mixed, but seem to be sort of brushed. I can't even sort of really work out why the Kiwi is even drifting a little bit lower than the Aussie, but it is. And just look for your pairs at the moment. Short term, there are some movements. I do like the look of Euro is probably the best pair. You'd expect sterling to continue to thrash about with the Brexit news. And dollar CAD, despite oil rallying above $53, I think this thing's just going to trade sideways. You'd think, you know, with the stronger Canadian CPI numbers, you'd think dollar CAD would be lower, but it's not. All right, and that's one of the more confusing situations we've got there as well. Now, just coming back to the numbers here, I want to give you a bit of a look here, what we're sort of really talking about with regards to these US numbers. Now, here's the economic calendar on Reuters at the moment, right? These are the numbers. You look at the dates here, 15th to 25th, 26th. These are all the numbers that have been delayed. Okay, so housing numbers, retail sales figures, international trade, durable goods, factory orders. There's a whole bunch of numbers here that need to be processed. And with this US government shutdown, they are not in the market at this point, right? So that's as soon as the US government shutdown is resolved, they'll start banging out these numbers, but they'll probably be a little bit distorted by then. As we move forward into today's trading, okay, you're looking at the potential numbers coming out now. We've got some Chinese GDP figures. That's where you need to be focusing on now. I expect those to impact sort of the Aussie and Kiwi. The correlation with China has broken down a lot, but still it can kick back into gear straight away. So Monday, there's not a hell of a lot going on. This US government shutdown is causing not only confusion in the US, but across all the major currency pairs. They lack momentum and direction because we're not getting the follow through from the US dollar. So despite the outlook here on some of the pairs, okay, it's sort of mildly bullish, mildly bearish, not really giving us a strong, confident picture at this point. Okay, so that's where we are. So with those Chinese numbers, I was just going to say there's a bunch of numbers coming out too. So don't think for a second it's just the Chinese GDP numbers. You got urban investment, industrial output, retail sales, and GDP. Right, so there's some big numbers here. You're looking for the numbers to line up, all strong or all weak. If some are up, some are positive, some are negative, you won't get much movement at all. And I would actually say with that overall movement on the, let me just shrink that page, on the dollar China, it's probably worth a potential trade here on dollar China itself as opposed to potentially hitting the Aussie and Kiwi. So just have a look at that. It is breaking through that sort of resistance line around 6.8. We may see it pop to the top side if all those numbers are weak. We may see it dip back down below that previous resistance line if the numbers are strong. So that's probably your major sort of focus for Monday. I'll tell you what, focusing on Chinese data and the yuan on a Monday, it doesn't seem right, but that's all we've got. All right, guys, that's it from me. There's not much else to do on a Monday except get your charts tuned up, see what the news is happening, see where things are going to be rolling out this week. And as you can see on the upcoming event calendar, there's quite a bit of data, right? And it's all good because there's not a lot of, until we hit the ECB later in the week, they're all good fundamental releases that can really impact the market. So we should see potential opportunities. Lots of Eurozone stuff coming out as well. Hopefully the Brexit goes a little bit quiet for a few days, gives us a chance to potentially get into Euro. I still like the Euro lower, and that's where I'll be looking for the data to drop from there. All right, guys, that's it from me. Have a good start to the week. I'll see you in the 247 trade zone. Cheerio.